Thank you very much, Steve. And Chris, I see you. I'm now going to make you the presenter. Look forward to hearing your voice and seeing your screen. Face, welcome Chris Lemieux. Hi, Chris.
Hi, how are you?
Long time, buddy. How are you?
Great. How are you doing?
I just realized I have interviewed you before.
Yeah, it was I think early last year, I believe.
Okay. So welcome to F.A.C.E. This is
Thank you.
the best social trading community on the net, in case you didn't know. Now you do. So what's on your radar, buddy?
Really, I've been looking at gold. It's had a huge move lower since, topping out at around 1360. There's a lot of talk about the Fed moving in December, possible in regards to a rate hike. They're also talking about potentially unwinding some of that QE in October, letting some of those bonds mature and fall off. Now, if anybody has followed the Fed throughout this this crazy journey post financial crisis, what they tend to do is prep markets for future moves. That's not to say that from now until then they won't change their mind, but what they want to do is provide price stability in regards to risk assets, try and keep those prices as stable as possible. So by giving markets enough time to adjust, they tend to smooth out that volatility, and that's why volatility is essentially at the lowest levels since 2007. So what we'll be seeing, I think, from now until October is they're going to start increasing their hawkish rhetoric about balance sheet unwinding. They're going to start talking about hiking again in December, and as long as they keep that tone, we could see gold lower. It could actually break 1250, potentially retest 1200 under that scenario. The only I think upside gold has is if something happens within the markets, maybe volatility picks up to where Janet Yellen feels the need to kind of take back that hawkish stance. Really, I mean, gold right now, at let's see, 1276. On the weekly chart, it's trading below 1283, which is my former support, now resistance. I think it could trade as low as 1250. We have seen some dollar strength on the back of the Fed speak. There is some narrative on President Trump's tax proposal, but I think it's more to do with the Fed.
It could go up or down. Is that what you're saying, Chris?
I mean, essentially, because I mean, really, when it comes to interest rate sensitive assets like gold, really the Fed and their stance on policy is really the keystone to where these assets drive. Because what I'm thinking is I have a longer term view on gold. I'm bullish gold longer term. But
where would you like to buy it?
Where would I like to buy it?
Yeah.
Sure. Well, let's see. Let me switch.
I mean, you're long-term bull, so if the Fed continues being hawkish and
right.
they hike in December, where do you think it could fall to? And is that a level that you think you're going to step in and do something about it?
Well, to be honest, I would like to buy some at about 1230. Actually, that is the retest of the downward trend of 2011. I think we could see some support there. And you
Would
know,
you short? If do you think it's a short here for a move? Sell rallies, back to 1280, 1300, looking for that.
Yes, I think between 1290 and 1300, I think it's going to be a challenge, especially with the current dynamics. I think psychologically the market wants to sell rallies. Now, just for some background, I've been bullish gold since 1140. I was long in December. I was kind of a contrarian. I thought gold would have a great 2017. So far, it's been good. There has been a large retrace, but I think we can see support at these lower levels between 1230 and 1200. Even given the Fed speak, I think the situations, there's a lot of risk. I mean, you got Spain, you got North Korea. President Trump's very unpredictable. He could do something to rattle the markets. And that kind of keeps me at least one leg in being long. But for those for those short-term traders, I'm more of a long-term trader on gold. But those that like to trade short-term, I think between 1290 and 1300 is a good place to enter a short, and I think we could see 1250 between and then 1230.
So does your view on the dollar parallel your view on the gold that the dollar
yes,
has bottomed? Go ahead.
Yeah, absolutely. I've been bearish the dollar pretty much all of 2017. I went into the year negative on the dollar, and when the Fed first began speaking, hinting at potential balance sheet unwinding, I knew that was a scenario where the dollar could rebound. I mean, in all reality, it was down 11% this year before recently rebounding. The long term.
What's your preferred long against the dollar?
Preferred long.
Yeah, there are many currencies. If you're bearish the dollar, you could like the Canadian against the dollar. You could like the euro. You could like the yen. What's your favorite long? What's your most precious currency against the dollar?
That's a good question. I think I would like the yen against the dollar. Reason being is I think initially, the way I'm looking at interest rates right now, U.S. interest rates, the 10-year and the 30-year, the back end, we saw a huge ramp recently, and that's beginning to fade. I think in longer term,
you're bullish the bond market, therefore bullish yen.
Yes, yeah, because I like to play that rate differential, and I think that the dollar yen has been a great proxy for U.S. rates. Yes, so I think and gold exactly. So I think longer term, dollar yen is a good bet on the rates and the overall if you're just playing the dollar.
Okay, so I know you've claimed and you were right about the last financial panic in 07, 08. Your read, what I gather from you is you're not a real believer in a lot of things that are happening, and that it's mainly just maybe the rubber band has stretched further than you thought it would. Where are you at on stock indices and equities in our current environment at record highs?
Yeah, I mean, I definitely thought that, you know, the whole dog and pony show would have ended sooner. But I mean, central banks
How
have
about now, though? How about what do you think? Is the pony ready for the glue factory?
Yeah, I mean, you know, I think so. I mean, see, the problem is, you know, as long as central banks continue, you know, propping that market up, it's going to keep going higher. I mean, it's just, unless there's some sort of systemic risk to the markets, I think it's going to drift higher. It's just going to grind higher, because there's really no incentive at this point for people just to stop buying, because they know that even if there is a little blip in stocks, you know, Bullard's going to come out, or, you know, somebody's going to say this, and it's always going to be a buying the dip opportunity. I mean, I'm really torn on it, because I understand.
We got to be close. We got to be close when the long-term bears are saying it's just going to grind up for a while. What do you think?
Right. I mean,
even you don't think it can happen that we could have a bear market anymore. And that is a different stance that you've had for a while.
Right. Yeah. Oh yeah.
Okay.
I mean.
That's what I'm saying. Even the long-term bears are throwing in the towel here.
Oh, I mean, absolutely, because I mean, it's hard to fight. I mean, you know,
well, I know my account has definitely, you know, shown Redding trying to do that. So, you know, it's very difficult to do. I actually think that we'll see that we could be completing something up here anyway, Chris. So you're more sanguine about the market. Sounds like you have no conviction. How about the oil market? There are a lot of bears in oil. They're thrown in the towel now. You have a view on that? I know that, you know, it's a very important industrial commodity. And also, I'm wondering what you're thinking. I know you follow fundamental macro events.
Mm-hmm, yes.
And I've been reading. China's about to launch a futures exchange to trade oil in yuan. Okay, and this is going to be the first deliverable contract of oil in yuan. So, could this be part of a de-dollarization that you know? Everyone's paid for oil in dollars up till now.
Right.
So go ahead.
Oh, no. I was just going to say it's definitely leaning that way. I mean, we're seeing more, you know, with the Chinese gold back oil contract, but we're seeing Russia beginning to, you know, kind of step away from the dollar a little bit, Iran. But I think that is a much longer term situation, unless there is an issue with the dollar confidence. Because
how about if there's an issue with China not cooperating with sanctions in North Korea, and we go ahead and say you can't use the dollar system with maybe some of their smaller banks? That could definitely speed up the process.
Oh, absolutely.
Right now, it appears that they are supporting the sanctions. You know, they will till it's painful, or they see people at their border. But the Chinese already have a backup to the SWIFT system, don't they?
They do. Yes, they do. And I believe Russia's actually working on something as well. I mean, it's definitely a trend that's taking hold. I mean, the dollar, you know, although it is still the reserve currency, it's definitely looking like, you know, big economies are looking towards an alternative. I mean, whether that is, you know, the yuan, or you know, a lot of China and Russia are looking at digital currencies.
Okay, I'm glad you brought that up. Can you wrap your head around what's happening in crypto? What are your views? Does it it kind of reminds me of the dot-com bubble.
Yeah.
With all these new IPOs, only their currency IPOs coming out. And eventually there was a, meltdown, but, you have things like Apple and Google and everything that rose from the ashes from the dot-com crash. Maybe governments want to go that way, and that's why they're letting it happen. What do you think?
Now, with, as far as Bitcoin and all these other currencies, it's hard to say whether they'll stand the test of time. I think really what the big picture is, I think really what the key thing to focus on is the technology that surrounds it.
Yeah, the blockchain.
Exactly. I think that's really what is going to survive. I think because really when you look at it, like a Bitcoin and whatnot, the key.
Are blockchains like Legos? Just kidding.
Well, if you remember going back before this huge run up, the whole focus is this decentralization, anonymity, deregulated currency alternative. But we're seeing governments issue more restrictions on it. China's cracking down on Bitcoin because they're trying to stem capital outflows. So I think what we'll see, the end game of this is, I think these type of digital currencies will kind of fall to the wayside because I think governments are going to start stepping in. And I think what will eventually happen is they're going to start issuing their own digital currency.
That's what I mean.
Right.
So that way they can control it. It's very Orwellian if they do it.
Oh, absolutely.
So what's the most important thing people have to know going into year end with market positioning here, Chris? I know you're starting a new website,
Yes.
MacroView, I believe it is.
Yes,
what are you telling your people to do right now?
Really is this
nothing is okay. Cash is a position.
No, absolutely. And the funny thing is fund surveys are coming out, and the percentage of funds in cash are actually at all-time lows. So, people have never been more invested, and that is kind of a risky situation to be in. I think that it is important to be nimble. It's important to have cash. Obviously every trader, investor, there's, they have their own, set allocation. But what cash allows you to do is it allows you to stay flexible, and it gives you optionality. So when opportunities present itself, you can take advantage, whatever your time frame is, whatever your thesis on a particular asset is, cash allows you to do that. If you're fully invested in, a full book, you don't have that opportunity to buy things when they're on sale.
Okay, so let me ask you to put your Nostra Lemieux hat on.
Okay.
Going into year end and into 2018. What is the one position or trade that you think offers the most potential going forward from this point on? And it could be long the dollar, short the dollar, long S&P, short, long bonds, any instrument, Chris. What are you laser focused on and looking to exploit?
Ooh, that's a good question. Now,
I only ask good questions, buddy.
Well, what I would like to do is I would like to sell dollar on the rallies. Okay. I think that it's going to eventually come undone, and I would like to stay long bonds, particularly the 10 and the 30. I think the 30 has more room to go lower. I don't think that the U.S. is going to remain strong economically, simply because there's no real trend in growth. I mean, we've had quarters that have outperformed expectations, but they've slumped over. I mean, if we look at inflation, even inflation, core inflation, which is ex volatile stuff like energy and food. I mean, it's sitting at 1.4, 1.5%, and it's only gone down. And we saw a little blip up in headline inflation, but a lot of that had to do with energy prices, because we got hit, the U.S. got hit with Hurricane Irma and Hurricane Harvey, which shut down refinery production, and gas really jumped. It jumped about 20%, and so I think what we're going to do, what we're going to see is, as refineries come on and as energy prices start to normalize, we're going to start to see inflation dip lower. And if inflation starts dipping lower, we're going to see, I think we're going to see a move lower in yields, which is obviously beneficial to bonds.
Okay, so I would sum it up that you're a U.S. dollar yen bull, which makes sense if you're constructive the long end of the treasury curve. And if we get a nice dollar rally, you want to remain short and sell into it. And you're a long-term gold bull, and you've given up the bear case that stock indexes will ever correct 10% again. Well,
I mean, I wouldn't say that. I mean, because see, this is how I approach stocks. In my opinion, there are tradable opportunities, but absolutely. But at these valuations, I don't see investment opportunities really. I mean, what I want to see is a big correction to really put money to work in equities.
You and the whole cosmos.
Right, exactly. I mean, if that ever happens.
Yeah. You know what? If it does happen, pitch it after it bounces, because I think the whole world's going to be looking for 5-10% correction, and maybe we get a rally from there. People will like it, but if it's gonna let people in, I'd be a little cautious about letting people in, getting in too early if it starts to open that door. Right. Just my view. And I'm just a blind squirrel in the middle of a snow-covered forest on a moonless night, wearing my shades, looking for a few nuts, Chris. So
exactly, we all are.
Yeah. So I want to wish you great success.
Thank you.
With your new website, what's the best way for viewers and people to watch a video later to get a hold of you and get on your list for the launch of your website? And what's the mission of the website, buddy?
Sure. For those that are interested, you can go to macroview.co. From there, you can enter your email address, and we will then put you on a list, and you'll be the first updated once we go live, which is just a matter of weeks now. What we aim to do is provide, non-biased, no narrative research and strategy to help people navigate the markets. I mean, we don't want to tell you what you want to hear. We just want to tell you what the data suggests and the best way to go about that.
Well, I hope pips rain down on you, Chris. And thanks for taking the time, my Trading Warrior brother, for dropping in and talking to F.A.C.E today.
Great. Thanks for having me.
All right, partner. Good hunting on the NFP, and F.A.C.E, that's it. Thank you, viewers at investing.com, for joining us today. You may want to check out our trial. It's $1 for 10 days to look at Nick's harmonics. You saw her today. Blake and Steve and Greg, a little under the weather, one of the best Ellioticians on the net. So See you, Ronit. See you, F.A.C.E. And remember, most of all, my friends, money comes and goes. Time is gone forever. Make it count. And don't just count your pips, count your blessings. See everyone for the NFP tomorrow. Have your battle gear on. Nice to meet you, Nick. Adios.